Joining me on the show right now is Dhirendra Kumar of Value Research to discuss those schemes. Dhirendra, it's good to have you on the show. Let's discuss Reliance Opportunities Fund. It's a growth-oriented fund. It's done well in terms of returns. What is your advice to investors who are looking to invest in growth-oriented funds in this kind of a volatile market?
Reliance Equity Opportunity is among the few impressive funds from Reliance, and it lacks the long history of its other equity fund, but it has been a very impressive mid and small cap fund. And there are other funds in this category who have not been able to protect the value through the lean times, and this fund has actually been far better than the peers, and we have rated it as a 4-star fund. I would say that any venturesome investor willing to assume risk, this fund qualifies as an eligible investment.
Well, Dhirendra, they are multi-cap portfolios and they are large-cap and mid-cap portfolios. What's the difference, and what should investors keep in mind while investing in funds with such a mandate?
We classify funds into, all equity funds, diverse equity funds are classified into these 4, and that is primarily based on the underlying portfolio. If a fund has over 80% of their investment into large cap stocks, and there also there is a quantitative method which defines large cap, mid cap and small cap. So if a fund has over 80% into large cap, invested in large cap stocks, it's classified as large cap, and this is based on the past 3 years full portfolio disclosure. So there is a possibility that if a fund changes its complexion, its classification can undergo a change. But this is as it stands today, that 80% and more in large cap is a large cap fund, into large cap stocks is a large cap fund. Anything between 60 to 80% is a large and mid cap fund, because lower than that will be getting allocated to mid cap and smaller cap companies. And the multi cap, there the range is 40 to 60%, and any fund investing over 60% into mid and small cap stocks are classified as mid and small cap funds.
Now, Reliance has a quant fund, and there are very few quant funds in India. Abroad, the theme is more popular. What should an investor keep in mind while looking to invest in a quant fund?
No, don't be under the notion that quant funds will be able to protect your capital. Quant funds have very limited history in India, and their limited history has been pretty erratic. If you look at the quant fund from Reliance, it has done very well in recent times, but early days it was difficult. There are other quant funds which have provided similar experience to Indian investors. They are not very old concept, and investors should not be under any notion from any kind of equity fund that it is going to provide any kind of capital protection.
Also, Dhirendra, aside of gold ETFs, a lot of gold funds are also coming up. What should an investor keep in mind while investing in a commodity-linked mutual fund?
There is not much to choose from, because when gold funds are basically a convenient vehicle, nothing beyond that, because when you invest in a gold fund, they in turn invest in the underlying gold ETF. So there is absolutely no difference, except that it costs 1% more, and it provides you the convenience, because when you buy a gold fund, you don't need to go to a stockbroker and you don't need a demat account.
Well, Dhirendra, thanks very much for joining us on the show and giving us your views. With that, we come to the end of this edition. Thanks very much for watching. Do send us your feedback and suggestions. We'll appreciate it.